You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 12th day of December, 2025. We're going to do things a little different today. Michael's going to come on first because he's got a ton of things to get done. And when he's finished, then I will come back and we will start the broadcast as we normally do. So, Michael, if you're ready, you can take it away.
Excellent. Thank you. 10 things at once, it feels like. All right.
Oh, okay. Everything looks good.
Great. Let me refresh this. I think I already did that, right? If I click on this, it should show next week stuff. It does. Okay. Here we go. Good afternoon, everyone. Today is Friday, the 12th day of December, 2025. 12/12/25. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button, and it's going to bring you to this registration page. Now, if you do this today, you get the trial through the weekend and all of next week. Right? So just fill out this form. Down at the bottom gives you TradingView login ID down here. If you don't have one, click on this link, go watch this video, and you can use this link right here. As a matter of fact, I'm not exactly sure how if I'm going to be able to use that anymore, but use that link down there. I just click on it and see what it does. Yeah, I guess we still can. Use that link down there and sign up. All right, you only need the essential version to get 2 charts. You can use the basic version, though I don't recommend it because you're going to need to pay for data. And if you get the basic version, which is the free version, the data is $31 a month. If you get the essential version, which is $15 a month, you can get the data, which is $7 a month. So it's actually $7 cheaper to get real-time data for everything, and to get 2 charts, and to get active indicators, and to not have ads and everything else that you get with essential over the basic. So do that. All right. All right. We had a pretty good day in the room today. It felt like it was going back and forth a bit, but the markets were really active. At the end, I ended up only trading 2 markets. I was trading just the YM and ES at the end because it was a spread in the gold, it was a spread in the NQ. But anyway, this is how it ended up. All right, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. We're up 168 ticks on the NQ, 29 ticks on the YM, 69 ticks on gold, and 7 ticks on the ES. That put us at $1,762.50 on the morning session. Today it took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $1,000 with 10 contracts on, or 100 with 1 contract on. We took 56 trades this morning with 8 stop outs. So we averaged 85% of our trades were break even or better this morning. Okay. On the month now, we're at $12,922. That's over 10 trading days, averaging $1,292 per contract for a 2-hour trading day. On the year, we're at $266,380 per contract over 214 trading days, averaging $1,244 per contract for a 2-hour trading day. Now, a couple months ago, I was below $1,200. I was in the 1100s. And I said, by the end of the year, I really want that to end at over 1,200. I think we're going to be able to do that. We only have about 9 trading days left this year. I think 9 full trading days, something like that. We have 5 next week, 2 the week after that, and 2 the week after that. So 9 if you have the half days in there. We might have 10 total. So that'd be double where we are right now. This could turn out to be a really good month. At the end of the year, normally, they have holiday trading and all that business. But because it's the end of the year, the holiday trading doesn't seem to have an effect around this particular holiday. All right. So the 24/20 blueprint, we're now averaging $7,428 per hour. We would have traded 29.6. We did trade 29.61 hours, getting our goal for the day this year. And if you had added one contract per month, we'd be trading 12 contracts right now, and you'd be up $220,014 if you did everything exactly like I did. Okay. All right. Let's get into the trades. We had a bunch of them, so we gotta go through them all. Let me just hit the control and back button on this. Hopefully we'll be able to knock out a couple of good trades in this session today. Okay, scrolling. Wow. Here we are. There's a lot of bars on the gold today. There were a lot of bars on everything, really. On the gold, our first trade of the morning was 1 tick. Then our next one was 10 to go to 11. We went from 11 to 12, 12 to 22, 22 to 23. So at that point, we're at 23. We had a trade right here that was a pretty good trade to give us 12 ticks to get us up to 35, and then we stopped out right after that. Now, the reason this has got the off blue arrow is because it wasn't off the midpoint. I had an order there that I didn't manage to cancel when it moved too far away and came back. But so at that point, after the stop out, we're at we were at plus 20. And then we stopped out again. We went down to 5. Then we had to claw our way back for the gold. Went 1 tick there to 6. And 10 ticks here to 16. And 16 ticks there to 32. Then we went from 32 to 35, so we had 3 ticks. Then from 35 up to 64, that was 29 ticks. We had one more trade in here somewhere. One more trade. Wow, where was that last trade? Look at all those bars that are in there. Anyway, we had one more trade. We went from 64 up to 69 at the end of the session. Somewhere in all these bars in here, we had one trade. We moved 5 more ticks up to 69. But the markets were wild today. Considering we didn't have any news, any scheduled news events, they were wild today. During the break, this was a trade that was good. This was a trade that was good. This was a trade that was good. This was not a trade. Nothing all through here. Nothing through there either. This one. This was a trade that would have stopped you out. Wow. That's right. There's fewer bars now because I'm starting, earlier than I usually do. This right here would have been a nice trade. And that would have been a decent trade right there. That would have been a good trade right there. And that brings us current. All right, so we ended up with 69 ticks on the gold today. So we did start out pretty good, and then we went all the way down to 5. We came back from 5 up to 69. So that was a good recovery. The gold almost has a trade here right now. I am trying to find my DOM. So there it is right there right now. That's a nice valid trade right there on the gold, off the midpoint right there. Okay. I didn't get it. My order's still sitting way up there, way up here. Put it on just a second too late. All right, the ES is about to give us a trade here. The NQ is not, the YM is not. The ES is the only one that's about to give us a trade. The gold is about to give another trade on the short side right here. There it is. That stop just went to plus 1 tick. We're gonna lock in 2 ticks on that. Yeah, with 2 on the gold. The ES needs the up close. Just write this in. Put it in the sheet later. The NQ, I know I'm jumping all over the place here, but that's because the market's just jumping all over the place. The NQ's got a short here. That stop just went to +4. We'll go to +8. Went to 12, I think. All right. Let me put those in. Hang on. It goes down here. So what did we just do on the gold? At 12 on the NQ, right? 12 on the NQ. And what do we get on the gold? 2 ticks, I think, right, on the gold. So it is 2 trades, 0 stop outs so far. Okay. The ES did eventually give a trade right here too. I guess you could probably still get in that if you wanted to. It doesn't look like it's gone enough to get the stop to break even. All right, I was going to go over the YM trades that we did this morning. So let's, well, first the ES did trigger. I'm going to lock in 2 ticks on that. And 4 ticks on that. And 8 ticks on that. It should go all the way up to 525. All the way to right here. Dom says it's going to go up even further, up to 625. We have 8 ticks. Okay, and that is 8 ticks on the ES. Here it is, right here. 8. Okay, and that's a 3. Right. Back in here. I was going to get into the YM. Let's slide this over like this, and we'll scroll back on the YM. This. The NQ does not have a trade here because it didn't go full cycle. This is what the morning's been like. If you guys are watching right now. And I have a feeling my whole day is going to be like this. During the break. Hopefully nobody gets salmonella poisoning from the food I cooked during the break. This is not a trade here on the NQ because we didn't go full cycle right there. All right, so on the YM, we started out today with 4 ticks. Then we got 1 more to go to 5, and then we stopped out right there. That was a mistake, stop out. But I stopped out on that. That put me down to -10. Then scrolling. I picked up 5 there to get me to -5. Then I had a really big trade right there. I picked up 30 ticks there to get me to +25. Then +25 to here. Went from 25 to 26. And 26, we had a big trade to 47 right there. Yeah, then went from 47 to 48, so we had a small trade. Then we stopped out. Oh, wait, we went from 48 to 59 somewhere. Then we stopped out. We went from 59 down to 44, and we stopped out again. And we went from 44 down to 29. The ES has a trade here. Okay. Went from 44 down to 29, and that's where we ended it with the YM, the 29 ticks right here. Okay, and let's see, during the break on the YM, did we have a whole lot going on? Let's crunch it up like this. We can see a little better. This was a trade here on the YM. That would have been a nice trade. Moving all through here, there was nothing through there. Nothing through there. This right here was not a trade because we didn't go full cycle. Oh, no, wait a minute. We did go full cycle. Okay, so this was a trade right here. Really nice trade there on the YM. And that brings us to current. So on the YM, we ended up with +29. +29 after a bunch of stop outs. Let me slide the gold over like that, and we'll slide the ES over like that. Now my ES trade that I had going here is still going. I want to +2 ticks on that. And we're out with 2 ticks on that one. Let's put that in. Got a 10, and this a 4. I think that's right. We had 2 there, 1 there. This should be a 5, I think. Right, didn't we have 2 on the NQ? We did have 2 on the NQ, 1 on gold, and 2 on the ES. Okay. So the ES. Let's go to how that one worked all day today. The NQ is in the red right now, so you're looking for shorts, not longs. Okay. So control and back on the ES right now. Okay, we just flipped the YBR on the NQ, so now we are going to be starting to look for long trades in there. Needs a down close on the lineup close right now on the NQ. All right, so here's the ES. We started out, we need the down close on the lineup close on the NQ. On the ES, we started out with a stop out right here. All right, we're at -10. And we picked up 8 ticks to go to -2. Then we picked up 4 ticks to go to +2. And we stopped out again, back to -8. And break even. We didn't have very many break evens today. I don't get very many break evens anymore. We had another one right there. Because usually I have a stop go to break even plus a tick or something better than that. But we went from -4 to 0. We went from 0 to 1, so we're at 1 tick right there. And then watch the NQ. We need a down close for the lineup close. Okay, we didn't get it. On the ES, I don't know. Oh, good. I did write them in. Okay, so we went from 1 to 5, and then 5 to 6, and then we had one more. And we went from 6 to 7. And that's what we ended with on the ES. We ended with 7. So during the break on the ES, everything's all green right here. You see that? Everything's on the tear right now. Oh, Paul, are you in here right now? You are in here. Okay, I meant to look something up for you during the break, but I'll show you how to do it. Do it on the monitor. I'll bring it over and show you as much as I can. Okay. Because what I said earlier about that being the time to buy call options right here. It's gone up significantly since then. Let's just go back here. Okay, we're looking for trades here during the break on the ES. And looks like there was one right there. One right there. Is this one? Yeah, one right there. And that was it. So the ES was pretty good to us. Today, overall, we ended up with 7 ticks. It was okay. It wasn't bad. That's how that all ended, right? So overall, we had a really good day. We had a lot of trades. The markets were a little bit wild. We ended up just trading these 2 markets at the end because there was a big spread in this one and in this one. Big spreads in both of those. Now, Paul, let me go look that up on another monitor for you and see if I can show you how to do that. Okay. Charles R. Schwab login. Okay. So the first thing you're going to do is log in, and then in the top section up here, you're going to go to trade. Okay. And then once you go to trade, you choose options. Right? So once you go to trade, it'll give you a drop down, and you choose options. And then within the options, these are the things that I typically trade. Okay, these are the ones that I typically trade right here. So in here, just enter SPY if you want to do an SPY and do strategy call like that. All right, so you enter in the symbol, do strategy call like that. So I will just choose SPY call. And then that is going to bring up a whole other thing that looks like this. Dwayne is recording all this, so you'll be able to come back and look at it. Okay, it looks like this. So in here, you're going to choose this and do buy to open, right? And then the SPY, the chain, this thing right here will show you the option chain. You want to click on that, right? even before you do wide open, just click on the option chain link right there. Click on that. And when you click on that, then this other thing will open up. And that looks like this. Okay, it looks like this. And so on this page, this shows the expiration date, right? That's a weekly option. It shows the expiration date. So what you want to do in there, well, it's going to show something else. Let me show you this. Okay. Up here at the top of it, it says calls and puts, strike 16, expirations 90 days. That's all good, but in here, just choose calls, right? Because you're not interested in the puts. So just choose calls. And you can do 16 strikes if you want to. And this is what it'll look like. Okay, calls only, and then do 16 strikes if you want to, like this. Okay, so get something that expires in January. It's going to cost a little more money to get something that expires here because you're paying for the time. But I would say something January 2nd, probably. Let me look at the calendar. Let's see. January 2nd is a Friday. Might go for January 9th. Okay, 28 days. You're going to pay a little extra for that. Right? And if I choose January 9th, then this is what it looks like. Okay, 28 days out. This is what it looks like. Right? So these are the prices for the SPY. Now, let's just look at this. What I was telling you earlier was based upon the ES going up that far. If we go here and we take a look at this, now I'm thinking the ES is going to get up to 7,000. It's going to have all-time highs to get up to 7,000 by, this is the H contract. I didn't mean to look at the H contract. The Z contract, well, the ES by itself is going to get up to 7,000. So it's going to have all-time highs. But if you look at the SPY chart on the daily, I think that is also going to have all-time highs, and that is going to get up to probably 700. Okay. Now, let me do the actual leg length on this. So, this leg length doesn't suggest it's really going to go all the way up to 700. It suggests that it's going to get up to there, but the pullback is here to the BBC. So if we start it from the BBC, that actually suggests that in roughly this amount of time, which would be the 7th of January, it should be up here to 717, is what it suggests. All right. So any strike price below 717 is going to be in the money at that point. I mean, right now they're way out there, so they won't be expensive right now. So let's just look at that. Okay. Let me change this back to the ESZ. I think is what I had that on, right? Yeah, because I had all that stuff drawn in there for that. So that's what that looks like for the SPY. Right now, if I minimize this, remember you'll be able to go and watch this all over again. Dwayne is recording this right now. It's all going to go out on YouTube. You go to youtube.com/CFRN, and you'll be able to watch it all out there. And I didn't have my question box open. Yeah, well, nobody asked any questions. Okay, well, that's good. So if you go to the strike prices, all those strike prices that I just showed you for January 9th, there's a thing right now that, let me show you again. Up here at the top, it says strikes. Mine is set to 16, so I'm going to get 16 strike prices, but I'm going to set to all, so you get all the strike prices, all right? Because then you'll be able to see a couple of things. If I do all, and I see all the strike prices for the calls, and then I'm looking over here. Let me show you. Okay. If I do it like this, I choose calls, all, and you get all the strike prices. Choose January 9th, 28 days. And these are the actual strike prices right here. All right. So these call options right now, they're 172 bucks a piece. Well, they're actually, the last was 148 bucks. So if you split the bid and ask in here, usually you'll be able to get that. Most expensive it would be right now is 174 bucks for one call option. And that's a 703 call. Now I think it's going to get up to 700, but you can do something in here so you'd be in the money if it got up to 700, because you're going to run out of time at that point. So you're going to want to be in the money as much as you can, because you're paying for a lot of time that's built into these prices. So if you did something like 695, right now you'd pay $361 for 695. So if it does go up to 700, then you'll be $5 in the money. So all the time stuff that you're losing between now and then, all the time value that you're losing between now and then, you'd make up for in the underlying security price. So that that's what I would consider. Something in the 390s. I'm sorry, the 690s. Something in here, the January 9th, 690 areas. I think it's going to get up to 700 by the end of the year. I don't know. That's what the chart suggests it's going to do by the end of the year. Something here in the 690s if you buy it. Then I'll show you what it looks like right now. Stuff that's in the money right now. Stuff that's in the money right now. Here's, well, hang on. Stuff that's in the money right now. Here we go. Oh, hang on a second. That's a January 9th one. That's not what I want. Let me do call, and then we'll go down to 6. Let's say today. Well, let's say something that's $5 in the money. Let's do that. 1, 2, 3, 4, 5. Okay. So what did I say that was? 374 or something like that. So here's the stuff that's 4 in the money. Let me do one more. All right, and this is stuff that's expiring today. So it's a double if you do that, but pretty close to a double if you do that. But it's gonna be way more than that. There's gonna be a lot of fluctuation. It'll be way more than that as you approach that time. Okay. Is the price always centered in my DOM? No, it is not. Okay, so Paul, that was everything you need to know about choosing the options from Schwab. Okay. Actually, that wasn't. Hang on, I got a little bit more to go on that. Once you select whichever one you're going to do, you have to, well, if I wanted to do this, if you go here, we close this, then you go into here and you do January 9th, and we'll say 695 call. All right, this is what you do. I'll show you this part right now too. This is the last thing that you do. Okay. You do buy to open like this. You choose buy to open 1 or however many you want to do. January 9th, 695 call. That's how you buy it. Okay. Right now it's got the bid and ask of this. 367 is the mid. If you want to pay, $367 or $370, whatever you want to do. But that's for these 695 calls. They're going to expire on January 9th. Okay. That's how you do that. Jimmy, no, the price is not always centered in my DOM. Double left click in the center of the DOM and that will center it. Okay. Like if I scroll all the way down here and I'll double left click, that's all you have to do. Double left click in it. There is an auto center thing, but I don't use it. Okay. All right. Well, I managed to squeeze some trades in there and answer Jimmy's question and do that demo for Paul all at once. All right. Man, I'm the master of multitasking right now. All right. So what do we end up doing in the trades? Did 5 trades with no stop outs. That's pretty good. In those 5 trades, with 1 contract, we're up $205, and with 10 contracts, we're up $2,050. So it is now 12:30. So I am going to put this on 12, 12, like that. And so let's just look in here. While I was showing you all that stuff with the options, there were more trades in here. There was a trade here. That was a decent trade. I'm sure there were more than that. There was one here that was a good trade. Right there, that was a really nice trade. Right there, that was a good trade. So there was a bunch of money to be made while I was showing Paul that. But you have to go back and watch all that in YouTube, Paul. Okay, I know I went through everything really quick. Yeah, the one thing you might want to look, one thing you do want to look at is open interest. Right? I didn't show you that part. Here, let me show you that. Hang on, when it populates again. You want to make sure you have open interest. Now, it's not really showing. This isn't. Oh, okay, that's why. Here it is. Volume, open interest. You want to go with something that's got open interest. Right? It's got a fair amount of open interest. Here's what it looks like on the January 9th. The 87, it's got 403. And this is going to increase as we get closer to it. The open interest will be higher as we get closer to it. But you got to have somebody that's going to want to buy it from you. All right. It's not like futures where there's always somebody on the other side. With options, if it just stinks and it's going away, you won't be able to sell the thing. You won't be able to get rid of it. So look at the open interest too. Okay. This is what this column is, the open interest. Right. And the change in the volume, see this right here is up $425. So this is the puts. So today when everything was crashing, the calls dropped $210 and the puts went up $425. That's the kind of action you get with options. See that one up there went up $662 today. All right. Really gonna wrap it up. It's time for me to wrap it up right now. So let me just show you this. If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that, it'll bring you to the registration page. Just fill out this form. Once you fill out this form, you will be sent everything you need to get into the room in the morning. All right. And to get your indicators indicating, if you give us a valid trading view ID, get your indicators indicating on your charts. In this session, we're up 2,050, 5 trades, 0 losses. In the last session, we were up 1,762.50 with 1 contract. This time we're up 205 with 1 contract and 2,050 with 10. All right, that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. All right.
Okay. Recap of the morning session.
Today it took 2 minutes and 1 trade to get to $1,000 with 10 contracts on.
Good job.
Thank you very much.
Well, have a great weekend.
All right.
You got a busy day ahead of you.
Yeah, I do. It's just craziness from here on out.
Okay, guys, as you know, we did things a little different today. Michael came on first, and so we're just go right straight to our daily devotional, which is where we typically start each and every breakfast. Devotional topic we've been on for the last 7 days. This is day 7 of 7. Anxious for nothing. Our scripture today is John 14, verses 25 through 7. I'll share it with you from the Message translation. Telling you these things while I'm still living. This is Jesus speaking. If you were at a red letter edition, this would be in. Telling you these things while I'm still living with you. Friend, the Holy Spirit, whom the Father will send at my request, will explain to you. He will remind you of all the things I have told you. I'm leaving you well and whole. That's my parting gift to you. leave you the way you're used to being left, abandoned. So don't be upset. Don't distraught. Again, that's John 14, verses 5 through 7. Now, we've covered a lot of different stories from different people over these last 6 days. Today's 7 of 7. Maybe one of those stories that we shared really stuck out to you. Or maybe your story with anxiety is completely different. Whatever battle you're facing with anxiety, the same Spirit who raised Christ from the dead is living in you. And He did not give you a spirit of fear. Doesn't mean that if you're struggling with anxiety, you don't have enough faith. Doesn't mean that you're not trusting God enough. In fact, what if anxiety could be the very thing that helps you learn to rely on and trust in? Could anxiety actually be a catalyst for drawing you closer to God? Anxiety becomes a gift when it helps us depend on God. Doesn't mean we stop seeking help or hope. It does mean that we know pursuing peace is a process. So, is it possible to really live life anxious for nothing? That's what we've been talking about. The answer, yes. Doesn't mean there won't ever be anything to be anxious about. But because of Jesus, we can live anxious for nothing when there's something to be anxious about. Not by our efforts, by His. And I want to end this devotion. Philippians 4, 6 through 7. Anxious about anything, but in every situation, by prayer and petition, with thanksgiving, present your request to God. Peace of God, which transcends all understanding, guard your hearts and your minds, Jesus. In Philippians 4, 6 through 7. Breathe in that truth. We often fixate on the word peace. It says, peace of God. True peace is found only in the presence of God. What if the answer to anxiety isn't less stress? God. Consider this. How might I regularly invite the presence and peace of God into my life? Let's pray. Lord, thank you for your constant presence. Come to you today, asking for the peace that only you can provide. We want more of you. Invite you into every part of our life. Help us rely on you fully and completely. We give you all of our worry, all of our fears. Help us to live anxious for nothing by depending. Trust you, are all to you. It's in Jesus' name we believe and pray. Everybody said, Amen. Last, if you're struggling with anxiety, someone you love is struggling, there's help and hope available. Just share the gospel. Everything you've learned this past week. That, let's go. Numbers from around the world. Now, I know a whole lot of people are feeling a whole lot of anxiety over what's happening in the markets today. But based on our daily chart of the ES, writing was on the wall. Indeed, it has come to pass. Let's start here in the US with the markets, or the indices as they're called. Currently, the Dow's down 164 points. Nasdaq's down 308 points. It's 1.5%. S&P 500 is down 64. It's almost 1%. The Russell 2000, our man in the street, is down 27 points. That's well over percent. In the commodity basket, oil is up 2 cents, trading 57.62 last. Gold is up 50 cents, trading 4,313.50 last. Silver is down $2.90, 61.68 last. That's a drop of 4.5%. The Asian markets at the close. The Nikkei posted a gain of 687 points, well over 1.25%. Shanghai rose 16. The Hang Seng gained 446.75%. The European markets at the close. FTSE down 54. DAX down 108. CAC down 17. So that gave us a green day in Asia, red day for the UK, and it is definitely a red Radio Friday here in the US of A. Let's take a look at the global news. It's an AI world after all. Disney announced yesterday it will make a $1 billion equity investment in OpenAI, becoming the first major studio to license a large slate of its characters and media for use in OpenAI's models, including its video generation platform, Sora. S-O-R. 3-year deal covers more than 200 Disney, Marvel, Pixar, and Star Wars characters for user-generated short social-style videos, Sora and ChatGPT. Disney retaining the option to curate select clips for Disney+. No talent likeness or voices are included, and the agreement restricts portrayals involving drugs, sex, alcohol, cross-brand interactions. The service is expected to launch 6. OpenAI, the partnership broadens its creative reach into Disney's premium intellectual property. While Disney plans to use tools such as ChatGPT across its businesses to develop new products, services, and interactive experiences, the deal comes a day after Disney sent a cease and desist letter to Google over alleged AI-related copyright infringement. The world scratched their head. The oil tanker that was seized by the U.S. military this week had been carrying sanctioned oil from Iran to Cuba and had a history of hiding its location, according to a maritime analytics firm. The company claims that for at least 80 days over the past 2 years, a tanker known as Skipper engaged in spoofing, the practice of falsifying location data in violation of a UN maritime treaty. Skipper's last known port call was Iran, where it allegedly arrived in July after visits to Iraq and the United Arab Emirates. Analysts say the ship loaded at least 1.1 million barrels of crude oil last month after engaging in rare ship-to-ship transfers. The vessel is owned by Marshall Islands-based Triton Navigation Corp., which the U.S. says is run by Russian oil magnate Viktor Artemov. It's operated by a Nigerian-based company and flies a Guyana flag. Guyana maintains it is not registered there. A whole lot of foot there. NASCAR yesterday settled with Front Row Motorsports and Michael Jordan-owned 23XI Racing, ending an antitrust lawsuit challenging the power the motorsports organization wields over independently owned racing teams. Under the deal, NASCAR will offer teams permanent charters, guarantee them spots in races, and ensure revenue stability. This marks a departure from the expiring charters teams have operated under since 2016, which Jordan testified teams are pressured into signing and are economically unviable. Jordan's company co-owns with three-time Daytona 500 winner Denny Hamlin and Front Row filed the antitrust suit after NASCAR gave teams 6 hours last year to sign a contract extension. Both teams raced most of last season without charters and said losing the lawsuit would have put them out of business. Financial terms of the settlement were not disclosed. Economists testified that 23XI and Front Row roughly $364 in damages. Go NASCAR. You know, Formula One's becoming one of the biggest sports in the sports world. It's not going to overtake soccer. Brad Pitt movie that came out, Formula One, that had a whole lot to do with it. We'll see if it sticks. Oracle may have an OpenAI problem. Oracle stock has tumbled nearly 4% from its September peak, racing more than $360 billion from its market capitalization. That's right, $360 billion since September. Nearly $67 billion of that decline occurred yesterday alone, as Oracle's second quarter results failed to placate key concerns for investors that the company is too heavily reliant on AI. Oracle's AI-fueled growth targets outlined in its first quarter sent the stock to a record on September 10th, briefly making its founder, Larry Ellison, the world's richest man. Back in September, the company told investors remaining performance obligations, value of its future revenue from customer contracts signed, has soared nearly 360%. $455 billion. It was later revealed that ChatGPT developer OpenAI accounted for at least $300 billion of its customer commitments as part of the Stargate project. Since that news came out, the stock has struggled. Rising concerns about OpenAI's mounting costs, set to hit $1.4 trillion. Deal spree with firms including NVIDIA, CoreWeave, AMD, and Broadcom, in addition to Oracle, and increasing competition from Google's Gemini models, made investors even. And that's really what's dragging everything down today. I don't know if it looks too good to be true. Probably is. So. Question is will this pullback find a bottom anytime soon and create a bounce? Bloomberg President Donald Trump is expected to direct his administration to move to reclassify marijuana as a less dangerous drug. Familiar with the matter, a move that could represent one of the biggest shifts in U.S. policy toward cannabis in decades. Trump has discussed the plans with Health and Human Services Secretary Robert F. Kennedy Jr. and Centers for Medicare and Medicaid. Dr. Mehmet Oz said the people who weren't authorized to speak publicly about the talks. The president has spoken about the idea with industry leaders, including Kim Rivers, who is the CEO of Trulieve Cannabis Corp., and Howard Kessler, a payments financier, who has advocated to expand access to CBD, a compound found in cannabis that doesn't cause a high. You can buy CBD in the grocery store now, or at the convenience store. A White House official said no final decisions have been made on the rescheduling, and Kessler didn't respond to requests for comment on discussions with the president. Cannabis is currently labeled a Schedule I drug, putting it in the same category that includes substances like heroin, LSD, both categorized as having no medical use and a high potential for abuse. Well, we know that LSD is being used in clinical settings, and so far the reports have been quite positive. Trump is pushing to reclassify it as a Schedule III drug to the people, which would move it to a tier for substances seen as having a lower potential for dependency, on the same level as ketamine, Tylenol with codeine, as well as anabolic steroids. Most states, or I won't say most, but yeah, I'm going to say most states have made medical marijuana legal. A lot of states have made recreational use legal. But on a federal basis, still. Now, I think this is Trump trying to get the attention of some of the younger folks who maybe smoke a little more grass, as we used to call it, than other generations. Problem with the marijuana available today, it's in a medical dispensary or in a retail setting, the potency is nothing like grass we smoked as teenagers. This stuff is so incredibly potent. It's creating psychosis, lots of emergency room visits, because people just get high. I know there's people like Snoop Dogg and Willie Nelson who say there's no such thing as too high, but there is. And this stuff that's out there can be dangerous. So, is it addictive? No, not physically. Psychologically, yeah. Even the old stuff, the dirt weed. Reuters, Netflix says it must acquire Warner Brothers Discovery to compete with YouTube, but antitrust experts doubt regulators will buy that argument. Streaming giant's $72 billion takeover of Warner Brothers Discovery's studios, HBO Max will face scrutiny from U.S. and global regulators, given its scale and the combined 428 million subscribers. Netflix insists the deal is needed to challenge Alphabet's YouTube, which media analysis firm Nielsen ranks as America's most watched TV distributor. You all know that I went to YouTube TV some months ago. But attorneys say the Justice Department is unlikely to see Netflix and YouTube as interchangeable rivals, given their different content, audiences, and business models. Netflix spends billions of dollars on scripted original movies and series like Stranger Things and K-pop Demon Hunters. Frequently dominates the Nielsen rankings, most streamed original series, accounting for 8 of the top 10 originals in a recent ranking. Subscribers pay between $8 and $25 monthly, while ads remain a small but growing revenue stream. YouTube TV runs about $80. I think it just went up a little. But that's a lot cheaper than the $160 we were paying to Dish Network or Cox Communications, which also runs about $160 a month. For TV, remember when TV was free? Granted, we only had about 3 channels, ABC, CBS, NBC. Then along came UHF, and you could get that snowy, grainy content. So I guess want to play, gotta pay. The S&P 500 cash market closed at an all-time high. It's not unusual in 2025, though it's been 6 weeks since the last one. The setup sure is different on December 12th than in October. The October high came amid a bout of investor euphoria, driven by a strong earnings season and excitement about the promise of artificial intelligence. That headiness is nowhere to be found this time. Positive sign for bulls hoping for. Now, on futures, we don't have a new all-time historic high. See that when we go to the charts here in just a few minutes. Deutsche Bank and Goldman Sachs and other Wall Street banks are forecasting that the U.S. dollar will resume its slide next year as the Federal Reserve keeps nudging down interest rates. Currency has stabilized over the past 6 months after tumbling by the most since the early 1970s. During the first half of the year, when President Trump's trade war unleashed havoc in global markets. There's something wrong with that statement there. Trump was not the president first half of 1970. Somebody made a huge typo there. And oil back above its weekly trading zone, or it was the last time I looked. Oil held near its lowest close in almost 2 months as concerns about an oversupply offset bullishness in wider financial markets. Brent traded little changed above $61, reversing an earlier increase. Global stock gauges have record highs in their sights as the Federal Reserve's interest rate cut this week and its upbeat assessment of the U.S. economy and boosted investor sentiment. Sure couldn't tell it by looking at the charts today. But oil markets remain pressured by the prospect of a significant surplus next year. Turning from Wall Street to Capitol Hill. Minnesota is now facing one of the largest documented government service fraud scandals in United States history. Under Governor Tim Walz's evidently unwatchful eye, federal prosecutors have estimated that approximately $1 billion in taxpayer funds have been siphoned from multiple state and federally funded social service programs over the last 5 years. As of this writing, 87 individuals have been charged in connection with the scheme, 61 convictions already secured, and more charges continuing to be filed against these fraudsters. The bulk of the fraud scheme centers around 2 government programs. First target was the Minneapolis-based not-for-profit Feeding Our Future, which distributed federal child nutrition funds during the COVID-19 pandemic. Beginning in April 2020, the organization's founder and executive director allegedly oversaw an elaborate fraud operation that involved over 250 fake meal sites throughout Minnesota, siphoning over $250 million in taxpayer funds. The second scheme involved Minnesota's Early Intensive Developmental and Behavioral Intervention Program, which provides treatment to people with autism. Defendants allegedly fraudulently billed Medicaid for autism therapy services that were never provided. Recruited children from Minneapolis's Somali community did not have autism diagnosis. Parents were then paid between $300 and $1,500 per month as kickbacks to keep their children enrolled. To put this into perspective, one company billed Medicaid over $850,000 in 1 year for one child. It was paid out $438,000. Federal prosecutors are still working to determine the full scale of the fraud. I mean, it's so big, and the more they dig, the more they find. Now, Waltz is blaming the judge in the Feeding Our Future case for forcing the state to continue making the payments, yet this evidently was such a blatant misrepresentation of the facts that the judge himself came out and said, Department of Education voluntarily resumed payments and informed the court, FOF, resolve the serious deficiencies, prompted it to suspend payments temporarily. All of the Minnesota Department of Education food reimbursement payments to FOF were made voluntarily without any court. So how did Minnesota's darling Somali congressional representative, Ilhan Omar, respond to the massive allegations against members of the community? Well, she did it in typical squad fashion. She redirected her answers towards President Donald Trump's response. A question has also been raised about whether Omar knew that this fraud was occurring, or at least should have been tipped off to the fact that something was amiss. One of her own former campaign officials, for example, was convicted of stealing millions of dollars and has on multiple occasions been seen with another member of the fraud scheme who similarly stole millions of dollars. Predictably, Trump did not mince words when discussing the issue. He called Somali immigrants garbage. I wish he wouldn't do that. That's Trump. Of course, not every single Somali immigrant was part of the massive fraud scheme. Only a fraction of them were. And Trump's response, while not appropriate, shows that he evidently harbors a deep resentment for those entering our country from abroad and siphoning billions of dollars in taxpayer money. This is an issue that Americans had to contend with for 4 years during President Joe Biden's term, as millions of migrants entered the U.S. unlawfully and were met with 3 square meals a day, cozy hotel beds to sleep on. I think I mentioned to you a radio host in San Diego crossed the border. Now, he lives in San Diego, but he went to Mexico, then came back across the border 6 times, and 6 times he was given $2,000. You know, to kind of get on his feet as a new American. Now, he did this to prove that this fraud was going on, and I'm assuming he gave the money back. Otherwise, he wouldn't be talking about it. Could be wrong. And last but not least, Democrats on the House Oversight Committee have made public previously unseen photographs of Jeffrey Epstein's estate that include several high-profile individuals, including President Trump, Clinton, Steve Bannon, and Bill Gates. You've already seen these pictures. Democratic lawmakers posted that they received 95,000 photos. They have released about 19 photos thus far. The trove of materials did not include any context as to when or where the photos were taken of the notable. Now, I wonder why that is. Last week, a judge ruled exhibits and investigative materials from the sex trafficking case against longtime Epstein accomplice Ghislaine Maxwell can be unsealed. Prior to that, a judge said materials from an abandoned 2000 grand jury investigation into Epstein could be made public. The Justice Department faces a December 19th deadline to release the files, which Trump pledged to make public during his campaign. This continues to be a developing story. Stay tuned. Okay, Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, but also crude and silver. Currently in week 384. Over the last 384 weeks, we've issued over 21,100 individual handcrafted alerts. We've averaged on a weekly basis 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our support holders. This morning, Valerie did the recap at 6:30 a.m. Eastern. She will update it and finalize it for the week this afternoon or tomorrow morning. In the places. Time she did the recap this morning. Since the markets opened last Sunday night at 6 p.m. Eastern, issued a total of 47 alerts. One never triggered. Still waiting on the outcome of 7. And I got a feeling that after today's wipeout, a lot of these 7 were short alerts. And yes, they've now triggered. But again, she'll officially update it and post it this afternoon or morning. So, at the time of the recap, 6:30 a.m. Eastern, we had 39 actionable alerts for the week. 6 or 15%. Stopped out, again, based on simple structure, simple process we teach all of our support holders. Every logic alert has an entry price, long or short. Initial target designed to help get your goal for the day. Additional targets, then a final trade to target. The purpose of the alerts are to teach you how to read a chart. Sure, you can trade them. Never trade a single logic alert. Please use them to learn how to read a chart. Because if you want to trade for a living, you must be able to read a chart and understand where to anticipate resistance, where to anticipate support. Otherwise, you're kind of flying blind. Logic alerts. If you really buckle down, in a couple weeks, you won't even need the logic alerts. You'll be able to read the chart yourself. And not doing as well in your trading as you want, that might be the very reason right there. You don't know how to properly read and interpret what the chart is telling you. When we go to the daily chart of the S&P here in a few minutes, we'll show you how you can know things ahead of time. Now, you're not going to be 100% correct all the time. That's just not possible. As I said, over the last 7+ years, We've issued over 21,100 alerts, but we've still seen 20% or less get stopped out. Basis. Sometimes the market just doesn't do the next logical. Zillion different reasons why it doesn't, and we don't try to figure that out. Just on to the next opportunity. I get stopped out. I trade again. So the logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock, traders around the globe. Day session is their night session, and vice versa. Now, 384 weeks, that's a very long time. Long before we had Logic 247, we had our original alert service, Concierge Trade Alerts. They're different in a lot of different ways. For the purpose of this discussion, I'll just say they don't come out around the clock. Published as a static report 5 minutes ahead of the Globex Open achieving. We all know this is the Friday session, but the Friday session began last night at 6 p.m. Eastern, not 9:30 a.m. Eastern this morning. Globex markets open each night, Sunday through Thursday at 6 p.m. Eastern. Last night, 5 minutes before the Friday session began, all of our traders had all of these targets. The S&P 500, Dow, Russell, oil, NQ, gold, and silver. As we go through the individual markets and you see these targets drawn out on the chart, just remember, our traders had that information 5 minutes before the market. So our first stop is the daily chart of the S&P 500. It's opened on the wrong screen for some odd reason. Let's see if I can fix that. Come on. Okay. Now, I'm going to get rid of these vertical lines because it makes the chart just look crowded. But I did it a week ago last night. It was only a workshop. What I was highlighting is that when the black step line crosses blue and climbing, price will almost always retrace back to the BBC. Price always reverts to the mean. In our case, the mean is green. Call it the BBC. It simply stands for bull. When price crosses above the green line, we're bullish and expect higher prices. Price crosses below the green line, we're bearish and expect lower prices. Above the green line, higher prices. So, it happened on July 30th. Happened again on August 19th. September 22nd. October 9th. October 31st. And now here, on November 24th, we see the black step line crossing red and falling. All of these, in fact, going all the way back to April 24th, all pullbacks to the BBC from above. Here, we got a pullback that traded through. See, the pullback holds more often than it doesn't. This was a real interesting one. It took 6 days. This pullback lasted 6 days. Every one of those candles is touching the green. That 6-day pullback went on to give us new all-time historic highs, both intraday and closing highs. Now again, these are futures. This is not the cash market. Okay. So, got a double bottom going here. Don't have a double top. Now, talked last week about the fact that step line, like it was getting ready to cross. So you see how many days of advance notice we had? Then we finally crossed on December 8th. And on December 11th, yesterday, got our retracement back to the BBC. Now, when climbing gets directly above price, it becomes potential resistance. Like that. Like that. And like this. Now, yeah, we spiked it and closed above it yesterday. We opened last night. We gapped lower on the open. And we ran all the way down to the BBC. We even spiked it. Now, yesterday I talked about the fact that the daily BBC and the 62% fib extension were aligned. So that was potentially support times 2. Spiked the BBC and the 62. Didn't make it all the way down to the 50% fib extension. Now, price on the daily chart hits the BBC like it did yesterday. It led not only to a bounce, but a positive close. And I think a lot of folks were expecting that rally to continue last night and take us up to the all-time historic high. Now, if you understand head and shoulders patterns, and we're not really pattern recognition people, but this is a reverse head and shoulders. Head is the left shoulder, building out the right shoulder. The all-time historic high is the neckline. Price today, it's well off the low of the session. Still red. See where the resistance came in, right at blue and climbing. Now, we had this knowledge days. Then we had the Fed announcement, of course, and that kind of, up the jams. Price ended up doing what we thought it would do. So what do we think it's going to do from here? Well, Michael thinks we'll see 7,000 by the end of the year. I'm not quite as bullish. Very well may be right. Got the 50% fib extension right here. Right at bullish cross. That's when the line is above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So I'm thinking just might sell off into the close. Sunday night, if we hit this area, it should be good for a nice bounce. Question is, now if that happens, blue and climbing is going to turn to red and falling. Climbing is bullish, red and falling bearish. So how do we close today? Scheme of things. Now, all alerts, both the logic alerts and the concierge trade alerts, are created on the chart. I chose 30 minutes years ago. Nothing magic about 30 minutes. Just a time frame I chose and decided to stick with it. Vertical lines you see here on this chart. This is Friday. This is Thursday. Back over here, Wednesday. If I scrolled back, you could see Tuesday and Monday. Horizontal lines are our weekly trading zones. 2 days, 15th of this month. mark 16 years that we publish the weekly trading zones for our members every single week. The zones come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. Change in any way whatsoever. Yesterday, we ran right up to the zone 69.25/26. Then, unthinkable. After this big rally, gapped lower on the open. Step line crossed. Wandered sideways. One climbing turned to falling. That took us down to this zone, which held for a while. Eventually, it's ripped right through this zone. You see, when price drops to a weekly zone, we expect support till otherwise. Price rallies up to a zone. This yesterday, we expect resistance until proven. Price drops to a zone, we expect support. Drop to a zone, expect support till proven otherwise. Price rallies up to a zone, resistance until. It's pretty simple. Now, look what's happening here. Wondering, is that the lowest weekly zone? No. One more below at 67.60/61. Now, yesterday, we're at the second highest weekly trading zone. That's the highest weekly zone for the week. So we made it to the second highest zone. And see, there's streets. Now, the step line is in the process right now of crossing red and falling. Could find resistance at the zone at the underside of the short target. See. And if we rally into the close, we're going to go through. See. However, any one of these areas I just pointed out, resistance that actually sends us lower. Did trade below this zone today. Now we're back above it. Again, seeing it on a daily chart and a 30-minute chart. This, and then daily again. Okay. All right. On the Dow. Dow just went wild yesterday. Last night, market opened in the first 30 minutes. Market opened last night at 808 and ran up to 865. Call it 50 points. Don't need 20 points to get your goal for that. Then we just kind of consolidated along the target and price got below the BVC. Pullback holds more often than not. But after a move like this, you gotta expect a retracement. Went from 7,880 up to this was off the London Open. This was the London Open. And we put in the high of the session, 8,917. Now, this is the highest weekly trading zone. Now, Came close, we didn't trade through it. Then down here, the zone is 48,340/45. And the low is 55, listed by 10 ticks. As you can see, the step line on the way down, see how they're running parallel? Step line on the left, right? Looks like that's about to change. As the step line crosses red and falling, expect price to revert to the mean. Price always reverts to the mean. Again, in our case, the mean is green, all the BBC. Already had one attempt. I got slapped down. See what happens. Russell. Big day yesterday. Leg, retracement, leg. Now the Russell, while the opening candle last night did drop to the step line, did manage to run up, and by 9 o'clock, we hit the CTA long target. And then we back to the BBC. Price got below the BBC. Down we go. Market found support 2551/52. Now 2589, that was the highest weekly trading zone. So 589/2590. So there are weeks where we see price do this. Trade above the highest zone or zone by close of business on Friday. It's 5 p.m. Eastern today. Expect price to be at or below. See, it's already below. But we found support right here. This zone 2551/52 was published Monday morning at 6:15 p.m. Eastern. It's the same spot we found support yesterday. And the support we found yesterday led to a mega rally in the Russell. Everything sold off the futures, the equities, ETFs, the crypto, name it. Everything taking a dive. But we know that in the big picture, pullbacks are important. That's what allows a bull market to continue. So, have we seen anything yet to create fear or anxiety? No. I mean, as an investor, sure, that's worrisome. As a trader, price drops faster than it rises. So, intraday trader, it's a beautiful day. Now, we almost made it to the underside of the short target. When we trade through one of the CTAs on the retracement, the underside can often be resistance in this case. If we get through it, the next resistance is going to be at the BBC. That is the highest weekly zone. NQ. Big rally into the close yesterday. Then this gap lower open. That is just massive. Rarely do we see that type of price movement during the week with futures, because futures trade around the clock. See, equities in the US, if you're a US trader, you can trade 9:30 a.m. to 4 p.m. Eastern. There are a few stocks that trade in after hours, but that's just a small piece of the pie. I don't hear it talked about very much. But it's a huge drop for the NQ. I found support for a while at the BBC. hit the short target an hour after the London. And at the zone, consolidated. Only one of three things happens when price encounters a zone. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, the slice. Now, right here, you can see that this 30-minute candle sliced through the zone like it wasn't even there. Ran out of steam, it retraced back to the zone it sliced through, continued in the direction of the slice. Step line is already crossed, and price is trying to work its way back to the BBC. Price always reverts to the mean. And see is right now, see this low here, here, good area for the market to find some resistance. That covers all the indices. Oil, kind of quiet today. Big down day yesterday. From resistance at the zone to support it. And then we opened last night and we attempted higher, but see blue and climbing is directly above price. Blue and climbing gets directly above price. It becomes potential resistance because it's usually on its way to becoming red and falling. One is bullish, the other bearish. And it took price right here down to the zone to the tick. Got to bounce off the zone, and then we came down and we hit short target. Simply based off yesterday right here. You see where it turned to blue? It's our support. Now we're sitting on top of the BBC. If crude starts to move higher, be very much aware that there is a bearish cross right here. 785. It's definitely potential resistance. That's if crude attempts to rally. Now, this is the lowest weekly trading zone right here this week for crude. So we dipped below it yesterday, dipped below it today, and now we're sitting just above it. Gold. Wow. Huge rally yesterday. Zone. Open last night, we pulled back to the BBC. The pullback held. That took us up to the long target. Continued through the long target. Now 43.10. It's not the highest weekly zone. Got pretty close. 22/23, that was the highest weekly zone. We hit this point right here. Nobody was willing to pay one tick more. Size of this candle. And at 81, dropped to, it's like 50 points. At $100 a point, it's a $5,000. And then it kept going. We hit the zone and we bounced up to the BBC. We're printing a green candle. Get above the green candle. You got to watch this area right here for potential resistance. Let's be conservative and call it 43.2. Price can somehow get through that. Right up here. Turn to red. That's potential resistance. Looks like it's trying to. That's how price moves. Leg retracement. Leg deep retracement. The question is, does it have another leg in it? So we'll find out. Last but not least, silver. On the open last night, we dropped to the BBC. Leg and a retracement, a leg and a retracement. Back hell, pull back hell. We hit the long target, and we hit the highest weekly silver, 65.05 / 65.06. Now, when I did the zones last Sunday night, never thought, I mean, math's math. And so when the math said the highest week zone is 65.05, I'm like, yeah, I don't see how that can happen. There it is. But when you get such a powerful up move, which is had this week. Now look where the market found support so far. 61.15 / 16. Again, that's the zone that was published. 6:15 Eastern. Spiked the zone a little bit. Took us basically down to this area. Not quite. You see where red turned to blue? Support. Step line is trying to cross red and falling. Tracement back to the BBC if we overcome the BBC. Now, most logical thing is we hit the BBC and we get another leg to the downside. However, if we trade through the BBC, watch this area right here where the bearish cross took place. Okay. Whether it happens today, happens Sunday night, middle of next week. This is a very area. 63 conservative and call it 63.87. Highest weekly zone. Then in 2.5 hours, we made it back to the zone. It's a big drop. Fast. Like I said, prices drop a lot faster than they rise. This sell-off happened in hours. Took a couple days up there. Hours. Now, we should have seen support right here. And as this candle was forming, maybe we did. Maybe it did hold there for a while. I don't know. It through that area, bounced right back. That's where we started our last look at the daily chart. Again, all of these vertical lines, step line, cross blue, and I could go back. I only went back so far. As you can see, it happened there, it happened here. Climbing, I mean the step line, cross blue, and climbing. And on May 20, see, step line crossed, back to the VC. Just pull back to the VC. As long as the candles are touching that green line, that means to go from bullish to bearish, you have to see, let's say we closed below the BBC today. All right, that's part one. Part two is we then need to see a candle open and close below the BBC. Then we officially go from bullish to support here. And then we get down to this double bottom. So, big question. Institutional traders have enough faith in the markets and the economy to take home any long positions over the weekend, or are they going to unload them? Unload them, sell off into the close. Got faith. It's here. On this day, which was a Friday, we had a huge red candle all the way down. Then we closed the high of the session. Following Friday, we had a huge red candle all the way down. And we closed near the high of the session. Possible that could happen today. Got to embrace all possibilities. Trade what's in front of you. To become a member, email Valerie, support@cfrn.net. Let her know you'd like to become a member. She'll send you the information you need to get signed up. Ask her about our holiday special and monthly subscription. She'll send you information to get signed up one way or the other. Once you're an official passport holder, 2 hours of live training every trading day. In live markets, in real time, real money. It's an interactive environment. In other words, there's a conversation going on. Every trade taken is being explained and shown. So watch and ask lots of questions and trade along in your sim account. That's how you get up to speed. Now, along with 2 hours of live training every trading day, you also have access to private one-on-one. Just ask. No extra charge. Got to ask. Strategy you learn and the indicators you use as a passport holder across all markets and all times. Not just futures, stocks, ETFs, Forex, crypto. Go from futures to equities. Change any of the indicators. You don't change the strategy. All the rules that you hear me talk about as I'm showing you each day how to read the chart, nothing changes. This price flows the same across all markets and all times. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. As a passport holder, you're going to get the Logic 247 alerts around the clock. That's how you learn to read the chart. Concierge trade alerts every evening, 5 minutes ahead of the Globex Open. Morning at 6:15 a.m. Eastern, you get the trading zones. You're able to attend the members-only workshop every night. And you get the golden keys that open all the private channels in Telegram. There's a bunch. Everything a trader needs. All under one roof. And did I mention round-the-clock support? Telegram. All right, let's wrap this week up today. Roles in marriage. Live happily with the woman you love. Life God gives you is your reward. Ecclesiastes 9:9. Here's an illustration of the different roles in marriage. A husband's role is like that of a thermostat. He sets the temperature in the home. Wife's role is like that of a thermometer. She reflects the temperature. Ideally, the reading of the thermometer should reflect the setting of the thermostat. In other words, if a man wants a warm, loving wife, he must be intentional about not bringing home cold, frosty weather. Here's another picture. Grapevines to become fruitful, branches must be elevated. Vine dressers, tie them to a post for support. I'm not suggesting that you tie your wife to a post, because as the grapes grow, the vine becomes heavy and begins to drag on the ground. Elevation keeps the fruit off the soil and exposes it to the full sun. Eventually, the branches spread along the post and thrive. Stability leads to fruitfulness. Same way, when a husband brings stability, strength, and support into the home, the wife can feel secure, cherished. This emotional and spiritual environment allows her to flourish, grow, her God-given potential. Solomon, divine wisdom, encourages, happily with the woman you love. Life God gives you is your. Whatever you do, well. Ecclesiastes 9:9. Best love, time, and attention. Turn on that investment. Be a harvest of joy, fulfillment, and lasting blessing. Part faithfully and trust that God will. That's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, God continue to richly bless you. His mercy, His grace. I'll see you at the bell. I got a new bell over here.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.